do not think we have a cruel choice between stable prices and full employment. I think the mandate that you and Congress gave us are entirely consistent. If we can ensure stable prices, the American economy can thrive, businesses can hire more employees, and the dynamic economic engine we talked about can continue to be the envy of the world. I don't think we have to run a balancing test. I don't think it's an either-or proposition.
All right, Kevin Warsh's first appearance before the Senate as head of the Federal Reserve. By the way, before this, he issued a statement, and it was really amazing. He talked about today being a hinge point. He also mentioned that his work demands a proper reading of economic conditions. He also stated what I thought was important, that it's inevitable that what is now called AI investments will soon just be simply called investment. Let's bring in Daniel Lacalle, chief economist at Tressis. And Daniel, you know, just the key moments for me that caught my attention, that clip that we came in, I'll start with that with you, because I've always felt the Federal Reserve was designed for the wealthiest of the wealthy and for banks, and you know, and their policies has always confused me. When wages get just a little bit better, they want to slow the economy down. Gas prices are through the roof, so what do? They want to send rates higher and make it more expensive to buy gas. It's already expensive. I never understood the logic and how they work from Main Street.
Absolutely, Charles, you're absolutely right. For too many years, we have seen a Federal Reserve that was way too much focused on maintaining and bloating the sovereign debt bubble. And therefore, every time that there was an inflationary burst, instead of doing things to strengthen the private economy and to put more money in the pockets of those that actually invest and reduce prices through competition and technology, what they did was the opposite. So when they looked at inflation in 2021 and said that it was transitory, they were completely wrong, because the government was spending like there was no tomorrow. And at the same time, what we saw is that once they finally realized that inflation was way too high, then they decided to hike rates, putting a double burden on businesses and on families. Yeah. Higher rates and inflation. Yeah. So what he is saying now is that they have enough tools to work without delaying, and certainly without weakening the private sector and small and medium enterprises. And that is a very refreshing statement.
You know, he said in 6 weeks, we have caused, I think, I'm quoting him, a sea change in new thinking. Then he later on said, okay, it's been 7 weeks, but I think he's true. When he went to Europe, the ECB conference, Central Money Bank conference, it was wonderful. But today he said, listen, that the committee has no tolerance for persistently elevated inflation. I wonder if the media will take that particular line and say Warsh is hawkish. I haven't interpreted him that way. If you had to, what side do you think he's on? Because I think the media is wrong. I don't think he's being hawkish, but I think he's saying what needs to be said.
I think he's saying what needs to be said. More importantly, he's not hawkish in any shape or form. What he is saying is stop second-guessing monetary policy, stop looking at things and thinking we need to sort of play the lesser evil trade. Look at the data, and that is what is going to tell you what the Federal Reserve policy is. So when you look at the data and when you look at what he is saying, it's absolutely logical. What he is saying is, look, the labor market is strong, but it could be stronger. And more importantly, the inflationary burst has been completely transitory. And now what we have is an opportunity in which they can stop and see. And also they have a window in which they may even cut rates, because if you look at both inflation, core inflation, and jobs figures, what they have in front of them is a disinflationary process, not a hawkish environment for rate hikes.
I agree 1,000%. I want to switch gears. And AI is floating around out there. I think they've got three issues, right? The inflationary aspect of it now, maybe taking jobs now and then down the road productivity. But one of the representatives there mentioned his son was an actor, and we know the entire movies are now being made out of AI. People are afraid. Warsh talked about a lump of labor fallacy and sort of the ability for us to, like every industrial revolution, ultimately has been better for people. We live longer, we're more prosperous, and there are more jobs. Do you think that the Fed will be able to get their wish, that Warsh will, that AI will be able to allow him to be more accommodative?
Absolutely. They just have to go to South Korea and see any of those countries that have a massive level of adoption of artificial intelligence and see that they have much lower unemployment rates. Furthermore, they have much lower unemployment rates in the segments that we call lower added value. And this is because artificial intelligence doesn't destroy jobs. What it does is that it transforms ways of working and it creates more jobs and creates, like every technological revolution. So it's great that he uses this fallacy to show the people that there is absolutely no risk in terms of job creation, that if the United States continues to have the engine of growth driven by technology, driven by energy, and driven by the manufacturing and services sector, it is going to have much more jobs. More importantly, much higher productivity growth, which means much higher real wage growth. Ultimately, what we need to understand is that artificial intelligence does not destroy jobs. It is going to create a lot more. And what we need to do is obviously create the tools and have the tools available to adapt to the new environment, just like any other technological revolution. So it's absolutely correct that there is absolutely nothing of the sort of a lump of jobs available, and that's it.
Good stuff. Hey, Daniel, it's been too long. Thank you very much. Appreciate it.
Always a pleasure. Thank you very much, Charles.
All right, folks.